itself, the global growth momentum is slowing after the front-loaded strong spending the first quarter of calendar year 2025. So overall, it's constructive for fixed income environment. We do expect global inflation ex of tariffs to weaken and to moderate further down. If you look at India, while rates may remain lower for longer, but we do expect system liquidity to remain substantial and remain above 1% of NDTL, which is about 2.5 lakh. So if liquidity remains quite ample, we do expect overnight rates to trade below the repo rate as monetary policy remains focused on enhancing transmission of previous rate cuts. So if the liquidity remains ample, overnight rates remain below repo rate, it should result in shorter end of the yield curve, looking at further reduction in yield and yield curve further steep. So what we really like in this market is the moderate duration, like we said, is a 2 to 5 year, which is not dependent on rate cuts, but largely dependent on easy liquidity and a stable lower for longer regime. We are also looking at selective credit exposure in well-managed NBFC and corporate issuers in some of our schemes, which are supported by benign funding cost and easy level of system liquidity. We're slightly cautious on long duration because we think that largely rate cut cycle is largely done unless and until growth shocks emerge materially. RBIs are likely to cut interest rates, and that's why we prefer to stay in the short to moderate rate. So, for investors who have a 12-month investment horizon and an appetite for mark-to-market volatility, they can consider moderate duration products like short-term or corporate bonds, which are mostly invested in the 2 to 5 year segment. Investors who are looking at a 6 to 12 month horizon can benefit from investing in money market or low duration strategies compared to the traditional fixed income schemes or the liquid money market schemes where they can earn slightly better carry.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.